Right now, this is my trading watch list for today. I was trading S&P 500 for longs and US oil also for longs. Going to the daily time frame. So this month's daily anchor VWAP, not daily, but monthly anchor VWAP, is telling me or is giving me my bias. So I'm looking for longs. The main thing that sets off an alert for me are these monthly highs. Those are major structural points that I take in view, and also daily highs and stuff like that. But since we're trading from day to day, from week to week, month to month, these major structural points for me specifically are the main things that I'm really looking at. So when I'm dropping down to the 15-minute time frame, which is where I'm actively looking for uh active trade ideas, from this point is where I start to see if we start pushing in a direction that adds an added probability onto my entries. So the immediate thing that I see coming into S&P 500 today is we get bearish divergence to start the act the active trading day, not the New York session, but when price closes and reopens in the Asian session, we immediately get divergence. Now, a lot of you have asked me, what's divergence? What's the major implication of it? So basically, what divergence tells most traders, specifically me, and from my trading, um, is when you see price going in one direction, and you have this RSI, which is another application. It calculates the relative strength of price, meaning that once it goes past a certain point, that's when price, in this case, it becomes overbought. So it's to insinuate that price action could go down, but just because nobody actually knows the acute reason why price goes down, it's typically based off of people who have a lot more money than I do and I have a lot more say than I do. These indicators are how I'm reading the markets. These are just risk factors that I take into play when I'm actively trying to get into trades. So with this 15-minute divergence on, I'd be trying to get in at a lower risk, meaning that, for example, I was trying to get into a trade for about like 1%. Clearly, I wouldn't go in with 1%, but since I have something on my charts which tells me that this couldn't be a perfect trade, I'm going to reduce that. I want to reduce as much exposure that I have onto the markets so that even if I lose, I don't lose a huge chunk out of my account. My main goal, or the main goal of every trader, or should be, is to be sustainable even through your losses. So yeah, you can make profit, but then also when you start taking losses, because losses are inevitable, is you start to lose less. But the only way that you truly understand how to do that is when you have a strategy. In my case, this is how I'm viewing it, and you have like a graded system to help you reduce your overall exposure on the market. So the next thing that I'm looking at is that we get a break of the Asian range. We break that range going higher. So then initially I'd be looking for price to retrace back down to the daily anchor VWAP, this red line, and trying to go down on a 1 minute for an entry. Now we never get price hits the daily anchor VWAP right here if you follow my cursor, but we never get divergence, meaning that price action could divert in a different way, or ideally in the way of my bias, but we don't get that. Price action pretty much starts to just range going into 12 p.m. And this is typically why I don't like actively getting into trades around like 11 to 12 p.m. because statistically over time, price starts to range, or it'll basically move a little bit in the direction that you wanted to go in, and then it'll just range after that. So I don't see a point in trying to risk my money knowing that price isn't going to move, or historically speaking, it doesn't have a lot of liquidity going into the markets around like lunchtime going into the PM session of the stock market, because that's what the S&P 500 is. right? It's a culmination of stocks. So, all right. So let's go to US oil, start on the daily time frame again. So this green line is this month's monthly anchor VWAP, which gives me my bias. So if price action is above it, I want to be looking for longs, and vice versa for shorts or for bearish entries, or thinking that the market could go lower. I would be getting into entries if price action was below that. But in this case, price action is above it at the beginning of this day. But the major thing that I'm looking at on the daily time frame is now that we have a ceiling. So at this point, when price touches this, I would stop looking for active trades. But we don't get that until later in the day, pretty much. So we get 15-minute bullish divergence. Price is going down, but the RSI is going higher, which indicates that price action could go higher. And in this case, it does. But after we get the break of the Asian range of this structural high, we never get a retracement back down to the anchor VWAP of the day. So then what that prevents me from doing is getting into any trades. I'm not going to go down to the 1 minute. Now, have I gone down to the 1 minute to look at it? Yes, but I'm not sitting there trying to figure out an entry. I have my edge. I want price action to touch this anchor VWAP. I want the 1 minute to give me divergence. I want price action to push in my direction, create some consolidation or an area where it starts to more or less kind of freeze up and give me an active entry after that point. But we don't get that. Um, so Euro USD wasn't on my watch list, but it was something that, if it had happened in the New York session, I would have definitely had taken this trade today. So we're underneath this month's anchor VWAP, but the next main thing that pretty much sets an alert signal for me is that we have a previous month's anchor VWAP like right below that, and as we see it, price action has been basically rejecting it. We haven't been able to move under it. So what I'm looking for at this point to see if price action could once again push towards it and I can get an entry going short before we touch this previous month's anchor VWAP. So going down to the 15-minute, the first thing that I'm looking at is, do we get any bearish breaks of structure? This is the Asian range low. We break that in the London session. We retrace back up to the anchor VWAP. Then I'd be going down to the 1 minute. We get 1 minute divergence, price action going higher. On the 1 minute, we getting lower highs. We get a bearish break in our direction, and we get some amount of consolidation, and we break this low again for an entry on this candle close. My stop loss will be at the high, and I'll be looking for at least 1 R on this trade. Don't get too concerned with these two entries. These are just things that I'm just placing on my charts. So don't. As a matter of fact, I'll just go ahead. The main thing that I'm really looking for are these single entries. But like I said, because this doesn't happen in the time frame that I'm getting to the charts, I'm not really going to be looking for other entries. Let me go back down to the 1 minute. And here we get another set of 1 minute divergence. Try later this up for y'all. We get a bearish push. This is our lower low after that bearish push. But we don't really get any amount of consolidation that I would consider getting into this position. Meaning what, Malik? When I look for a lower low on the 1 minute time frame, the next thing that will indicate to me for an entry is if price action, looking at my swing points indicator, is if I get a higher high. to indicate that price tried to push higher for a higher high. But we never get that. We never get the entry that would that would signify an entry for me. So, and we pretty much get to 12 p.m. At that point, like I said, I'm off the charts. I'm not looking at these things anymore. The only thing I'm looking for at this point is if I had any trade ideas to mark them up, add some notes. But other than that, we don't really get an entry. And we also never get another bearish break of structure that would make me want to get into an entry right around here where you saw me place that 1 minute bearish divergence. The one thing that I really like to see to add a probability or a confluence in a direction that I like to trade is that if we get breaks of structure. As we're retracing to this anchor VWAP, I want price to break this structure where you see this red line at. I want it to break that London low, retrace back to the anchor VWAP, give me the same 1 minute divergence, consolidation, no, a bearish push, consolidation, a break of that, an entry, and that's how I would be able to make money. But I'm not any, I didn't get into any positions today. The markets didn't line up, none lost. So this is typically how most of, well, I won't say most, but this is how typical trading days go. Some days you might have an entry. Some days entries might be leading up to an entry, but you might not necessarily get it. But that's the second part about being, I guess, a quote unquote good trader, is to understand where your entry works and also where your entries don't work. And for me, this is what helps me not get into unnecessary entries, is to understand what works for my strategy so I can stay on my edge, so I can be a profitable trader and a good loser if I notice things on the charts that I don't like, reduce my risk, or just not get into any trades because none of them are lining up the way that I like them to. But hope you guys enjoyed this video. Please like, please subscribe. There'll be a lot more videos coming soon. Yeah, just stay tuned for more content.